Hey, CGS investors, taking a look at the charts, markets all over the place again. We saw a big gap up in the in equities this morning. The Nasdaq was up over 2% and it ended up closing down -1%. We can see the daily chart here, the big gap up, and it squeezed a little higher in the morning and then reversed and sold off. Pretty bearish looking candle. Last time we saw this, the stock market had a huge gap down the next day and then continued to gap down into the very big panic sell-off we saw on Monday. So it's going to be interesting to see how this plays out going forward. All we know is, or need to expect, is big price action, big swings, and they're going to be random. They're going to be huge sell-offs, huge gaps, huge rallies, and they're going to flip and flop, and the market is going to shake itself out and cause a lot of chaos in the market. So overall, we're kind of in this scenario right here is very similar to this one here. It's also very similar to this one, which means it is random. It could collapse and we could see another big leg down. It could spark a rally and be a washout low and go into another leg higher. No one knows, but the key is we just need to wait for this type of price action to settle. When we get this type of price action, that's what starts a new trend. It's something breaking and the market will repair itself, and then we'll have a new opportunity in another ETF, which could be the indexes again. It could be potentially TLT. We'll just have to see. Maybe we sit in BIL for a little bit until there's, this could take a couple weeks to work itself out for all we know, which I kind of think it will anyway. So expect ourselves to kind of be sitting safely on the sidelines for at least a week or two. So we'll have to see how things unfold from there. In the grand scheme of things, when we look at our shorter term charts here, when we look at the 30-minute regular trading hours only, now I know CGS is more so investing, but I just want to generally show the nitty gritty, some of the intraday price action. This is the 30-minute chart going all the way back to beginning of May. This is this last cycle. So what you see on this 30-minute chart, this from a red trend to a buy signal to oversold condition to a sell signal is this overall trend right through here. So that is kind of what we've seen through here. And the key here is identifying when we are in one of these strong trends. And this is, we can see when the market gets oversold, it gets oversold. And the question is it oversold and going to rally? Or is it oversold and the trend going to break? And our strategy and our analysis shows us orange tells us the trend is breaking, which is also why we have an SS, which is when an uptrend breaks, it's going to usually go down after that, which is a sell short signal. We've seen those pretty strong moves. We had the first initial big sharp leg down. Then there was another sell signal after a big pop in the market. And of course, it is sold down again. We don't have another sell signal. Now we're into just kind of like maximum pain. How much is this market going to chop around? But when we zoom into the near-term analysis, the key here is when we take a look at our FOMO indicator, this is people piling in, buying bottoms, picking bottoms, and everybody thinks the market's going to go higher. So whenever we get these spikes above 3, this blue line, the market generally wants to sell off. And you can see how the market, it's just a short-term signal, might only last a session or two. But it is usually a signal that the market wants to go lower. Every time we see these, we had that yesterday and the day before, and today the market started to break down, and it looks pretty ugly. Where we are right now is kind of similar to right here. So we could see a big gap down tomorrow. Maybe it just creates a tight little bear flag and then has the second half of that move, just like we saw on Monday. So if we were to just draw this out, I know this is short term and don't really need to get into it, but we could see the market gap down and have a relatively sideways session and then see the second half of that breaking the Monday low, creating a massive wave of panic again. And this will definitely get a lot of people bearish, shake them out of the markets, and we'll go from there. But again, just let the market do what it's going to do. We might continue to channel our way up and form a bear flag before breaking down. So we just need to see what is going to unfold and take it one bar at a time. But the short-term charts definitely give us some insight to kind of let our brains know what is potentially going to happen and what to expect from there. All right, well, let's take a look. That is the QQQ. Now, the QQQ, I did mention this in our last video. On Monday, we had this measured move with the QQQ, the Fibonacci measured move, where the market gapped right down to the 100% level and has ripped its way back up. So overall, that was a very clean type of bounce, but now we're into no man's land. This market could just continue to go into a waterfall sell-off. And we see a big red bar in these markets, and it could sell off quite substantially. So the bottom pickers, this is when people get involved in the markets. A lot of people are talking about buying the bottoms, and it's going to be very interesting to see how this plays out. Usually the market is going to chop around, that anybody who bought a bottom will probably get shaken out. People who are buying put options, expecting it to go, they might get a downward move and think it's going to keep going and not get out. And then the market rips higher and puts them negative on their positions. The market has a great way of screwing kind of both sides if you're an emotional trader without a very clear trading plan to follow, to know when to get in, when to get out, and when to put positions on. Anyway, let's take a look where money has been flowing today. We have been seeing money flow into utilities, up 0.5%. They've had a very nice pop recently, a quick pullback. They're consolidating. They are still in an uptrend, so they could continue to move higher. Consumer staples are continuing to grind up and to the right. Again, these are defensive plays. Same with healthcare. No matter what happens, we need electricity, we need running water, we need basic supplies, we need healthcare. We have seen healthcare pull back a little bit more sharply, but utilities and consumer staples are the two more defensive plays, which is why they're both positive and sloping more up and to the right than healthcare is. We are seeing definitely some money flowing into the dollar. It's having a little bit of a bounce. It definitely had a huge haircut. The yen had a massive fall there the last several sessions, really killing the value of the Dixie here. Overall, it's just, at this point, it's just a short-term oversold bounce. We'll see if it gets some traction, but in the grand scheme of things, the dollar is still in this huge sideways channel, trying to figure out what it's going to do. Is it building a launch pad, a base, and working itself out? Again, until it really breaks out of this base, it's kind of drifting around in no man's land and trendless. If we take a look at the chart of bonds, we've seen some pretty good movement in bonds recently. We saw a huge pop of everybody piling and rushing in, and now it's kind of fizzling out. Usually what goes straight up on news, which everything going on in Japan and the Fed and all that stuff, whatever goes straight up usually comes straight back down, at least for half of the move is what I always say. That's kind of where we are right now. So emotional pop, and then it fizzles out, and now we just need to see where things are going. Pretty much all these emotional pops in bonds have generally ended going lower, but we'll see. I think the chart of bonds are slowly trying to build out this bottom and starting to show some signs of working themselves up. Definitely a lot of volume, a lot of people cherry picking, trying to get in at the bottom. I think longer term, I think it's going to do fairly well. But from a technical standpoint, it hasn't quite fully turned its corner yet to the upside, but we are close to seeing TLT do well and become a trading tool for us. We haven't really traded it since we got it literally at the open at the high up here, and it has collapsed pretty dramatically since, and we haven't had any part of that. If we take a look over at crude oil, up almost 3% this morning. Crude oil continues to kind of chop around. It's a lot like the dollar. The dollar had a move down, and now we're seeing crude oil channel sideways in a huge range. You could draw some highs, some pivot highs, pivot lows. It's trying to figure out what it's going to do here, but in the grand scheme of things, I feel like we'll eventually see this move down and head towards $40 per barrel in the long run. I think we have a pretty bearish price action here that this will eventually resolve with a recession and oil moving down. Now, if we take a look over at gold, we are seeing gold, silver, and miners down again. Gold's been holding its value fairly well. Again, it was really trading at all-time highs only 3 trading sessions ago. It's pulled back just a little bit. That's what I love about gold is, it's pulled back from kind of the full extreme, about almost 5%. But in the grand scheme of things, it's very controlled and still in a very strong bullish chart pattern. It did have a huge gap up, and now it's come down and more or less filled that gap and sitting right into these support highs. So we should start to see, I think, gold potentially start to pick up speed. Now, silver is a little different. Silver is definitely way off the highs, continuing to bleed down. This is a speculative play, more emotional traders, and they're more emotional because it moves percentage-wise a lot more. Huge difference from the highs. I mean, we've seen silver. Silver is the opposite. I mean, it's sold down almost 20% from those highs. And because it's that much, people start to panic and start to worry, and they start to get out of those positions. We have seen a lot of volume here on silver. Typically, when we see a lot of selling volume, it can indicate we're close to a bottom. So people are panicking, flushing out, and it should hopefully start to find a bottom here and start to bounce with gold and maybe come back to life. I am bullish on silver longer term, but right now, when there's panic and blood in the streets, almost everything will get pulled down, even gold. But gold just holds its value a heck of a lot more than silver. And the miner space. Miners down about 2.5 to 3% today, depending on the gold miner space. Again, it's got a bit of a hook and a pop, and then a sell-off, and we had another pop here, and this could very easily come back down, kind of fizzling its way out. Overall, I'm not a huge fan of the price action for miners. I mean, I've been talking about how I like just physical gold, GLD or physical gold. This has got higher highs. It also has a bit of a broadening formation. It's getting wider. It's not like channeling up in a nice controlled way. We have a very broad type of pattern here, telling us that volatility is increasing. This is 3 surges. Each time we've had a very sharp pullback right after. This could be 3 surges to a high. If the stock market continues to struggle, miners might really start to struggle here as well. While gold moves higher, we could see miners literally just chop and put in a bear flag here, and then eventually fall out of bed and sell off with the rest of the market in a month or two. We'll just have to go and see. And that's why I haven't been talking about miners. I've been focusing on just gold. Go with the more sure kind of play, the high probability play to make money versus swinging for the fence with volatile stuff that is stuck in the stock market. Gold miners are stocks. If the stock market's going down, they're probably going down or are going to be muted with it. Stock market might collapse, but miners might just trade sideways. You don't get the upside that you might be looking for, which I talk about this all the time. Looking over at, let's take a look at copper. I've talked about this with Sprout with Craig Hemke the other day. Copper is way off the highs, down about 20% or so. Copper is known as a kind of barometer, 25% of the economy. If copper starts to fizzle out and sell off in a big way, it can be a leading indicator that the economy is potentially fizzling out and starting to weaken. If we look at the long-term charts, obviously you can there's significant highs. Whenever these highs get reached, we see a huge sell-off. The lows are kind of all over the place. I could draw something pretty ugly across here. But obviously, if we were to come somewhere across, some of these lows, there's a lot of downside potential. I would say copper is pretty much in the middle of its range. Just between this high and this low, I would say it's right in the center. We also have a huge consolidation through here, which is naturally going to act as a support zone where lots of people have bought and sold. So there's going to be natural change of hands there. And just looking at this line all the way across here, it's also right across these highs. And there was a level here where it kind of acted as a support level, then became resistance. And right now it's sitting on it like a support level. But we'll see. Overall, not a good sign. This looks like it's topped. And if we're going to go into another recession, we'll probably see it back down at the lower end of this range for the second half of that move. Very similar to 2008. Go into a financial recession. This is the last recession. And that is where we saw that big drop in copper. And it can fizzle out just as quick again. Other than that, I guess we'll just look at the long-term chart. I don't think we covered this yet. Where we're at, actually, you know what? A good one here is, let's take a look at this drop that we have right here with the SP 500 and with the NASDAQ. Has a lot of characteristics. There's some very interesting things going on. So we actually have a cycle low that's forming, a particular multiple cycles putting in a low here this week. The exact same cycle low we had over here and the same cycle low we had over here. So that is pretty interesting. But the price action, the market internals, and the way this went into a precipitous drop with huge spike in fear This cycle low, if a cycle breaks, it can have a very big expansion move to the downside. I do think we could get a bounce here for a few weeks and then see another move to the downside. But my point here is the price action we're seeing right now in this kind of sell-off is very, very similar to what we saw over here. Our long term, when we go to the weekly chart of the SP 500, we are seeing the same type of setup here as we saw over here, where the trend may actually be starting. We might be going towards a bearish environment. 2022 was nothing significant. I mean, yeah, it sold down 25%. Most people really struggled and lost a lot. But for us, it was a time we stood clear of the markets. We played UUP. We played some of these long bounces with our other, whoops, let me just get that back here. With our CGS strategy, we played some trades to the upside. While most people were down 20, 25%, we were up about almost, we were up 5.5% or so positive, which is about a 20, 25% spread from the average person, which is pretty huge. And so I think we're coming back into a time where this market is going to struggle more. And I do think eventually we're going to go into something bigger where we potentially break this low, the 2022 lows, and go off a cliff and potentially go back to the COVID lows. So there is potential here for some pretty big market corrections when we go back in time and look at the price action percentage wise. Again, we're not looking to just bet ahead of everything, but there is some huge downside potential to bring us into these big tweezer lows, this other low from back in 2019. But that is the downside potential in the big picture. We're nowhere near there yet. The market has not even changed direction from a long-term standpoint. I'm just telling you things are weakening, and it's nice to know that we're in cash and that it doesn't matter what the trend is. We'll be able to take advantage of it, or at least avoid it and continue to grow with just a interest at worst case scenario. But this is what could happen. This will be a totally different world if this happens, 12 months from now. The economy, businesses, unemployment levels, it's going to be chaos. Probably precious metals will eventually find a bottom and go higher. But this is what we kind of want as an active investor. We want chaos. We want a financial reset. We can benefit from collapsing pricing. We can benefit from having more wealth than we've ever had when a new cycle starts, and we get all of that upside potential and beyond for the next 5-10 years as the new cycle starts. So lots and lots of potential there. And that's what we're able to take advantage of with the CGS strategy, is we can take advantage of difficult times and really good times with very little risk and stress. Anyways, that's it for now. We'll talk to you soon. Bye-bye.